Today is Friday, January 26th of 2024. We did several trades in our main option trading account, as you see here. First, we bought to close the SJM February 16th, $120 cash care put options for 25 cents per share. Smucker's is scheduled to announce earnings, let's see, in the end of February. So didn't want to roll those out to March, so decided to go ahead and just close that position out. We'll look for an opportunity to go back in after earnings. Then the next three are new positions. So first one, we sold to open the FDX March 15th 240 put option and bought the 200 put for protection. Pocketed $2.94 per share for that. All right, so looking at our charts here, starting on the top right here, we see that FedEx is broken out above the green 50 moving average. That's been serving as support for it. Trying to finish breaking through the red 200 moving average on this hourly chart. We'll see if that happens. Now switching over here to our bottom two charts, the daily on the left and the weekly on the right. So first of all, our left chart here. Now I thought about waiting to see if FDX came back down to retest this area to sell a put option. You could definitely do that because right now it's at this green 50 moving average, which appears to be serving as resistance for it. However, it did make a higher high here. And if it does come down, this area around 240, well, first of all, the area around this 200 moving average, which is right around 245, should be a level of support for it. Now, it's not guaranteed, but it should be. As you see, it started support for it back here, the end of December, and also again in January. So we'll see if it does come down, if that happens. And we're just below that. The next level of support is right here, these 3 days here, going back into mid-January, a couple weeks ago, or let's see, a week or two ago. And so that's where we sold our put option, the 240 strike price. Now overall, looking at a longer trend here, it wouldn't surprise me if FedEx, if it did break through this moving average to the green 50 moving average, also is area of support, which is just above our 240 strike price. If that area failed, it's quite possible for it to come down here to this red 200 moving average, which will put it on 225, 226. So just kind of keep that in mind. I always like to be prepared for maybe potential worst case scenario. Of course, it could always be a lot worse than that. But all right, so move on to MSM. So we sold to open the March 15th, $95 cash put option, bought the 80 put option for protection, got $1.48 per share for that. All right, so MSM. All right, so looking here at our bottom left chart, our daily chart, we see there was big volume as it declined, going back to December and into January. It declined right at 13%. See, volume was going up, but then once it gapped down and reached its low of that leg, which is of that downward move, we see that there was a nice long leg on this candlestick. So that's one reason why the volume was so high, because sellers sold it down, buyers bought it up. And then we saw it started going up in price several weeks back. And now what's happened is kind of got stuck in between the green 50 and red 200 moving average. And as a matter of fact, some days it touches both of those like it did today. So at some point, it's probably going to bust out to the upside or to the downside of these two moving averages. So I looked at the volume here, and volume appears to be slanted a little bit towards the buyers over the past several weeks. So we placed our strike price just below the area it's been finding support at over the past couple of days, and also just below that red 200 moving average, which has been serving as support for it this week. Now switching over here to our bottom right chart, our weekly chart, we see that the green 50 moving average has been serving as support for it over the past few weeks. 3 weeks ago, see that nice long leg where sellers sold it down, buyers bought it back up. That coincides almost perfectly with this low back here going back into October. So if it were to come down from where it's at now, that's quite possibly the next area we might try and find support, which will put our $95 strike price cash put option in the money by about about $4. Just kind of keep that in mind. This is definitely a position we can add to, and we'll look to if it continues to find support and the return is sufficient. All right, moving on to Johnson & Johnson. So we sold to open the J&J March 15th, 155 put, and bought the 125 put for protection, and got $1.66 per share for that position. Now first, up here at our top right chart, it appears that Johnson & Johnson, it might be making a little rounded top here. However, over the past few days, this red 200 moving average has been serving as support for it. So whereas it's trading below the green 50 moving average, it's still trading kind of around or above the red 200 moving average. So we'll keep an eye on that. Now our two main charts, looking at for whenever we enter a trade, the bottom left is the daily chart. And we see here that Johnson & Johnson, going back into December, broke out above the green 50 moving average. And then fast forward to January, broke out above the red 200 moving average. We see it's an overall nice trend on this daily chart. We see it's making higher lows. We had another higher low a couple of days ago. It's made several higher highs. So overall, it's like a nice trend. Just to be safe, in case it was showing weakness, we sold the 155 put. So Johnson & Johnson can still drop about $4.45 from where it closed today, or 2.5% before our put option is challenged. And we see that's an area that was right around where it found support back here in mid-December. Then switching over to our weekly chart, we see that this area it's at now, it broke through the green 50 and red 200 moving averages. Now it's kind of coming on and testing that red 200 moving average for support, the general area. And so we'll see if that holds. We can add a little bit more to this position, and so we'll look to do that if at all possible. All right, then our final trade here is in Comcast. So we went out of this to avoid earnings, and now we're looking to go back in and build our position. So we sold to open the CMCSA March 15th, $45 put, and bought the 37.5 put for protection. Pocket nice premium of 74 cents per share for that. All right, so put our charts up here, if I can put in the right ticker symbol. All right, so after earnings, we see Comcast had a nice big bullish candlestick up, and we see a leg there. Sellers sold it down, but today buyers bought it back up, closed almost on the high of the day, so looking very bullish. The past couple of weeks have shown some nice strength from our buyers here. So I would have preferred to have sold this put option right in here around this $42.50 area, but the return just wasn't there. And so the question was, do I not go back into a cash card put option in Comcast, or do I play it a little more risky with a little better return and sell one at a new potential support? We see this $45 area is an area that served as resistance for it going back here into mid-December. So now that it's pushed through on high volume, that area technically should serve as support for it if or when it comes back down. So that's why I decided to sell at 45 put. And we'll build this position slowly. We only have $9,000 at risk if you ignore our protected put option. If you consider that, then we don't have much at risk at all. But we're considering the cash card put option portion. So we have $9,000 at risk and a company that I believe is still undervalued. Looking here at our weekly chart, we see it was an overall nice uptrend, and it kind of started trading sideways towards the end of last year. October, November, December traded sideways, kind of consolidated around that red 200 moving average. Now it appears that moving average is now serving as nice support for it. We see volumes increasing on a very strong candle this weekly candle. It opened on the low and pretty much closed on the high. So very strong looking candle there, higher volume than average, and that makes sense. I do believe Comcast is undervalued, and after their positive earnings report, investors agree. So now where will it go? Well, it appears our next major area of resistance is going to be right here at these highs from these candlesticks back in August and September, which will put around 47.5. So that'll wrap up this week, and that's our trade for today. I hope you have a great weekend.